If you enjoy this content, please take a moment to rate and review it. Your feedback will greatly impact our ability to reach more people. Thank you.
All right. Back in the studio.
Yeah, excited to have you back in Nashville.
Yeah, happy to be here. Not that thrilled about what's going on in the country at the moment. Got a text last night from a family member, and, people are going to need help with the looming threat of not receiving SNAP benefits for the month of November. I've not yet been in a situation like this where I'm somebody who can support, family members who find themselves in this situation. And, sometimes you just don't even know that family members are in that situation. Right. They're just, they're holding down their lives and doing, what they got to do. And then lo and behold, it's like, well, this is how they get by. Right. So not an awesome situation we're in.
I mean, the SNAP benefits are necessary. There's a reason we provide them to people. It's just human dignity, human kindness. And then the other side is there's a lot of federal workers that have jobs and just are not getting paid.
TSA, air traffic control.
Right. So it's all around. But the politicians don't seem like they're really spending much time negotiating. I haven't noticed anything that seemed like it was going to end the standoff.
No. It's this weird metaphor for what feels like the disconnect between our elected officials and the reality of the citizens they represent.
Right.
That's just really frustrating. So yeah, I don't know. I mean, we're going to talk about a whole bunch of stuff, but it just feels like when we're in the midst of that, all these other things that we're going to talk about just don't. We're going to talk about them because they are important, and hopefully the elected officials figure this thing out. I mean, it feels to me like the Dems are waiting until November 1st when open enrollment really begins and the rates roll out to kind of be able to emphasize why they have taken this path in the first place. It seems like that was their calculus, and the removal of SNAP benefits has sort of been the Republicans' countermeasure. And it all just seems, I don't know, very, very, it just seems pretty cruel. So
it's cruel and it's unnecessary by politicians in D.C. that are not feeling the pain. And so they're just, whatever, playing their negotiation games, but they're affecting real people in the country.
Yeah.
It's their job to pass these things. So
anyway,
it's frustrating.
We're gonna go on and talk about a bunch of finance stuff here to kick off the show. So before we even get into that, I just want to sort of acknowledge that we're a very sad and dark moment in the country. And also, I was hoping we would have gotten through the storm season without anything nasty, but holy cow, Category 5 over Jamaica.
Yeah.
So just not like the most awesome week.
Right.
Yeah, before we start talking about all-time stock highs and AI and VC funding.
Yeah, just to remember that there's two sides to the K-shaped economy.
Yeah, and they are pulling further in opposite directions every day.
Yes.
We were talking about it in the early part of the K-shape. Things like the inability to buy a home. You know what I mean?
Yeah,
that was kind of like the first sign of it. It's like, hey, there's the people with assets, the people without assets. Now it's like there's the people with food and the people without food, right? I mean, it's starting to get really pretty nasty.
Yeah. Well, yes, we have some finance stories, but we have some job losses. I mean, there's a bunch of stories I think that will, unfortunately, more emphasize this point than make the audience feel better.
Yeah, absolutely. All right, so with that, let's dig in. Jerome Powell and the FOMC came out yesterday. They issued a quarter-point cut, but there seems to be, I don't want to say dissension, but differences of opinion amongst the group around what is the right course going forward. And how can you blame them, right? I mean, this is a group that has sort of hung their hat on being data-driven, and we don't have data anymore. Right. So I don't know how you make this when I think you said they articulated that they're in a fog. Yeah, you're in a fog. They have no data. There's no data.
I think that is right. And it's also right that they've been in a fog for years. I mean, they don't do a good job projecting where the economy is headed, in my opinion.
No,
they
they
are
don't.
very good at saying what happened in the rearview mirror. And yes, Powell spent a lot of the press conference talking about how much uncertainty there was, how foggy the outlook is, et cetera. I think it's his job to make a decision about which risk is more dire and then take action. And it's pretty clear to me that, well, inflation is never good. We have a bigger problem in jobs.
Oh.
And so it seems obvious. So whether there's dissent in the committee or not, I don't necessarily care. Like, it seems pretty clear from the outside that inflation is not running away. Technology is making a lot of things cheaper, except for healthcare and maybe education. So I don't know. It was a frustrating speech because he's talking about all this fogginess and dissent in his committee, but it just seems like they're making it harder than it needs to be.
Yeah, well, they're at the tail end now of their run, and it's looking like they're going to leave their post with very little control in terms of hands on the wheel. They also are ending qualitative tightening as well.
Yes.
So
That's good.
Yeah, maybe just a quick 30 seconds on what that means.
Yeah, so they will stop reducing their balance sheet by selling assets into the market and getting money in return, cash in return for it. That pulls money out of the economy and is a drag. They've been trying to reduce the balance sheet. It got built up significantly at the beginning of COVID, and we will get back to almost the start of COVID. So we're not really skinning the balance sheet a lot, but I think it's fine for the U.S. government, for the Fed to have balance sheet.
Wall Street Journal, tens of thousands of white-collar jobs are disappearing as AI starts to bite. Layoffs at companies ranging from Amazon to Target are sending young and experienced workers alike into unwelcoming market. So this is kind of certainly no surprise to us. And you just kind of wonder who this was a surprise to, quite frankly.
I think there's a lot of people that hope it won't happen to them and think it's going to happen 5 years, 10 years in the future and just go to their job and don't listen to any news. But yes, it wasn't surprising to me. I think it's going to continue, right? We've been talking about this. There's been more and more corporate America that are not like tech forward companies using AI. And now you're starting to see the effect, which is Amazon, Target. There's a whole list of companies. They can do the same amount of work. They can deliver the same services or goods with far fewer people. So it's good for shareholders, but it's not good for the workers.
No, it's just, I think the thing that is I feel at a loss for words, right? My background is in programming. And so I've been watching the progression of technology and seeing how technology is continuing to get higher and higher level. And when I say that, I mean making it easier for humans to do more with it.
Yeah, abstracted away from binary.
Yeah, exactly. Yeah. The ultimate, if you just play the game theory out of that, ultimately it would be computers using computers to be able to do things instead of like having the human do the thing. And so if you've been a technologist, it would be hard to not see this coming and not see the impact it was going to have on the economy for people who didn't start to navigate towards positions. I hope that we do some anthropological study on the human phenomenon of being faced with this reality and sort of being so resistant to the inevitability of it. Because, I mean, the conversations I've had over the course of the last 4 years, like I don't know how many of these I've had with people who just were absolutely in denial about this fact.
Yeah.
You know, I mean, Vic, how long, I mean, I feel like once a quarter I bring this up. How long ago did I tell you it didn't make sense to learn how to code?
I mean, that was probably 4 years ago.
Yeah, it's 4 years ago.
Yeah.
It's way before LLMs.
Right.
But you didn't need an LLM to kind of see where this was going, you know?
Yes.
And if it didn't make sense to code, you could then extrapolate that to like everything that's point click. You know what I mean? Like if your job is really fundamentally pointing and clicking and dragging with a mouse, you're in trouble.
Well,
Like if that's the job.
yeah, I might define it. That's certainly true. But I would define it a little differently. If your job is to talk to people through email, voice, or text, or Slack, listen to what they need. This could be subordinates, it could be senior people, it could be customers, it could be support. But you're taking inputs.
Yeah.
And then you know how to go get those answers. Might be from a database of information. It could be asking someone. And so you go around and you find the information that you give back to the person. You're that like middle management. It's the definition of middle management. We don't need those people at all, or we need far fewer of those people because it's going to be automated. And there's a lot of white collar jobs where people make whatever, $80, $100, $150, $200,000, $300,000, and they're not going to be needed.
I mean, I feel like I need to take my book and like wrap a nonprofit around it and find a way to like give as many copies of my book away as possible. Because like what this really boils down to is if you are not an entrepreneur, you don't actually understand how the economy works. You perform a job and you get paid in exchange for that job. That's not the same thing as understanding how P&Ls and balance sheets and markets work. You know what I mean?
Yeah.
When you understand those
You're
things,
dependent on some company paying you because you don't understand
company.
that. Yeah. Right.
Yes, on one company. And you also have this like weird belief that there's some obligation, some long-term ethical obligation from that company to you. I mean, I don't think anyone believes that anymore. I think we're clearly, we've been saved from that illusion.
But nothing has replaced it. So
but nothing has replaced it.
People know that is no longer a safe belief, but they have nothing to put their faith in differently. Entrepreneurship would be that, but most people don't know how that works.
Entrepreneurship and the internet, or things in the world of atoms, right? You're going to have a much longer runway in the world of atoms. So electrician, plumber, house builder, like I don't care. Anything in the world of atoms.
Yes.
Much longer range.
Physically touch something.
Correct. But if you're in the world of bits and you are not in capital allocation or entrepreneurship, I don't know what you're doing. I don't know what you're doing.
That's right.
In the world of bits. All right. Inflation isn't as bad as economists thought, but Americans still hate it. Wage increases have slowed for middle and working classes, putting pressure on those households. I've told you that I'm having a hard time eating out here now. You know, when I'm in Mexico, I'm eating food that, just with all due respect, I know some great restaurateurs in this country. I'm very good friends with many of them, but I would say on balance, the food is better. Certainly, I think objectively the service is better, and the price is half.
I think the inputs are better. Like the
quality
of the
produce
and the ingredients.
Oh my gosh,
better.
Forget it. The mangoes and it's like, forget it. Yes, absolutely, 100%.
And cheaper.
Yeah, and so here, all of those things are not as good.
Right.
But the cost is double for that.
Yeah, and just to be clear, you're talking about in Nashville, not in like New York or some expensive city. Nashville is
a very expensive city now.
Yeah.
It's not New York. But it is a very expensive city. With a very, very strong, against our peers in the country, with a very strong food scene.
Yeah.
Right? Like, I mean, pretty soon I think, Michelin's probably going to announce some Michelin listed restaurants here, we got James Beard winners here.
Right.
Like we're, in the United States, Nashville is very, very strong on the food scene side.
Right.
No question. But it's like everything costs too much, man.
Yeah.
Everything costs too much.
Yeah, that's right. And I will stand by the fact that I think the Fed should have cut, but it is part of the equation that the cumulative effect of inflation is really damaging to people that get a paycheck at the end of the week and spend most of that paycheck on their living expenses.
So before the show, you said cumulative, and I was like, what do you mean? You mean the compounding impact of it year over year? Like, okay, yeah, and this year it's only 3%. That's what it's going to be. But
3%, it's 2%, it's 4%.
Right.
I mean,
stack that over 5 years.
The highest it's ever gotten in our memory is 7.
Yeah, and wages aren't going up.
Wages are not going up at the same level. They're going up at 1%, 2%. You're losing hours. People are losing hours.
We just went over the job losses. So so right now you're just trying to keep a job.
That's right.
You're trying to keep a job.
Yes. And so if you go down a little bit, what I meant by cumulative is, the 3% is cumulative over time. And so this is a chart, if you're listening, the price of coffee, a pound of ground roast coffee in 2020 is from the Labor Department, was just over $4 a pound. And there's been no huge jump up, but over 5 years, 5.5 years, it's now over 9. So it's more than double. And people don't understand. It's hard. No human can understand the effect of compounding without seeing a chart like this.
Right.
It's 3%, 4%. But when you add that up over even 5 years, you're losing a lot of buying power. And people's wages are not going up at that level.
Yep. Yeah. So, I mean, we've got a really nasty, even for people who, it's like, we talked about SNAP.
Mm-hmm.
That's kind of, bottom of the K.
Yes.
And then we've talked about job loss. So we're going to add more people on that bottom part of the, like maybe they were on the upper part of the Cape. They're going to just shoot to the bottom part of the Cape because, in that article, you can click the link in the show notes, but in that article, they talk about how many people have been out of work for an extended period of time. It was like 20-something months, right?
I think it's 27 weeks. I think it's 27 weeks.
Oh, okay.
It's like a half a year.
Okay. All right. I mean, people are not finding the next job.
They're not finding the next job. The way I think about the K-shape is if you rely on your salary or your pay, might be an hourly rate, for your expenses, you're in the bottom part of the K. And if you have a net worth where more than half of your value is in stocks and bonds and real estate, then you're in the top part of the K. And so if you lose your job, you're even worse off. But if you have a net worth of $10 million, the stock market and real estate and other things are increasing. You may not be liquid, but you have some ability to buy things.
Yes.
And unfortunately, there's an age issue. We're like below our age, below X generation, it's a much smaller percentage of people that have any significant holdings.
Yeah. Yeah. All right. The good vibes are back on Wall Street. Earnings, deals, and trade talks have helped send stocks to, you guessed it, records. I mean, it's getting like old talking about all-time highs. It's just, what's the point of, like, you can't celebrate an all-time high if it happens every week.
Especially when the story before is so depressing. I mean, like, okay, it's an all-time high. You're taking value out of workers, saving a ton of expenses. And for each company individually, I totally get it. Like, their job is to maximize shareholder value. But at the society level, you're taking money out of the people that need it most, and you're making the top part of the K get to a new all-time high every week. That's the market-based economy we're in. I don't know how to stop it, but...
Oh, no, you and I are not capable of stopping it. All we can do is continue to watch it.
Right.
And discuss it. Moving into VC, OpenEvidence, the ChatGPT for doctors, raises $200 million and a $6 billion valuation. I see lots of positive chatter among my clinician friends on LinkedIn talking about using OpenEvidence. And I think one of the things they're most happy about is they can interact with it and it learns. So like if one person has an interaction with it and they sort of question it and then it sort of picks up something, the next doctor who then asks a very similar question benefits from that interaction from the previous doctor. So it's a little bit of like because of the quality of who is engaging with it and the quality of the data set, the JAMA data set that it has underneath it, you're going to end up with this very, very high quality and highly performant, and I think ultimately highly trusted, because it's closed network, LLM.
Yeah, I think that's right. I've been frustrated with OpenEvidence because they won't let me try it.
That's why they're valued at $6 billion.
Right. And, but that allows them to use their users to sort of retrain and get smart over time, because they know that it's only physicians that are in there.
Yes.
So there's no Yahoo VC just asking about something.
Right. Yeah. So Vic, stay out of there. Just you use ChatGPT like the rest of us. Human Health raises $8.5 million to expand precision health platform with plans to deepen women's health focus. So yet another women's health focused VC round. It seems like every week we've got another one. And this is the round has new investors: Local Globe, Airtree, Skip Capital, Alivia, and Scale Investors.
Yeah. So another women's health platform. I think it's also worthwhile to note that it's two women co-founders that seem to be doing really well. They have a big product focus in their own background. So I think it's a great, looks like, I mean, I don't know much about it, but it seems like a really interesting company.
Curve Biosciences, $40 million raised to advance whole body intelligence platform for chronic disease monitoring. This round was led by Luma Group with participation from First Spark Ventures, Microsphere, Civilization Ventures, LifeX Ventures. So what do you think about this one? I mean, big round, good group around the table. I couldn't quite tell if it's truly clinical or consumer. I just couldn't really understand that. But that's, doesn't mean anything. I just couldn't pick it up.
Yeah, I don't get it. I mean, it may just be because I don't fully know the whole company strategy, but the very detailed whole body test where you test all the different things you can test for DNA and blood and all the different organ types you have, that makes sense, I think, for catching something early that you could then treat faster. Mm-hmm. Them pairing it with chronic disease is just a disconnect for me. I don't see how that really helps chronic disease. I mean, if you have chronic disease, you have diabetes, you probably know you have diabetes. Now, maybe there is something around the gut biome that you could do to help work on it. I mean, there might be things that they're doing that I don't understand, but in general, chronic disease, there's pretty clear understanding of how to manage it and make it less bad. And it's really behavior and getting into the right treatments, the right changes. So I just don't get how it one goes to the other. Cancer or something else that you find, I think, is a different story.
Celerity raises $4 million to speed payments. This is a Madison-based healthcare fintech using AI to accelerate payments to providers. $4 million oversubscribed seed round secured $24 million debt facility from First Business Bank, and the round was led by HealthX Ventures, which is kind of the prominent health VC in the Madison area.
Yeah. Yeah, this is an interesting company. It's basically buy now, pay later for healthcare, which, since healthcare is the number one cause of bankruptcy, I think it's very needed. How the buy now, pay later model works in general, I don't think I fully understand. But the way I've thought about it before is if you bought a TV and didn't pay off the payments, they would take the TV back. In healthcare, that's always harder because you get the treatment, you can't really give it back, and they can't take it back from you. And even if they did, it was not worth anything. So I think it's really needed. I'm a cheerleader for this. I don't know if I understand the model, but it would be great if it works.
Yeah, I mean, I'm sure underneath it is that AI helps the underwriting.
Yeah.
Bit, to minimize risk. That if I had to sort of guess, I think the secret sauce is AI underwriting.
Mm-hmm. Yeah.
Because you're right. I mean, I think the collateralization on a doctor's bills. That's pretty tough.
Hard. Yeah,
that's kind of tough. Honey Health CEO discusses the company's $7.8 million funding round. They said that in 2026, organizations will be looking for operational platforms instead of narrow point solutions. So this is a sort of broad AI agent platform doing workflows, data fetching, patient notes, all the things. And they're focused on large independent practices and small hospitals and health systems. So obviously trying to stay below the radar of Epic, which I get and I respect, but also looking to sort of build out a platform that wins the space, or at least is like a top 3 player in the space. This is, generally speaking, a model I like. Try to leverage AI to help with efficiencies, but steer clear of Epic. I like that model. The seed funding was led by Pelion Ventures with participation from Streamlined, Burst Capital, and 8-Bit Capital.
Yeah, this is the first of a couple agent-related rounds. I was going to say starting to get, I think I'm already cynical about the number of AI agent rounds, and they can't all be successful.
Yep.
I'm starting to have this kind of, metric that if you have proprietary data, like OpenEvidence has access to JAMA and no one else does.
Yeah.
Or you have distribution, like you have a way to talk with only this type of customer. Maybe you have a, existing relationship with them or something.
Yep.
I think those are really the 2 places I'm going to invest in AI. Because otherwise it's just super competitive, and every week the cost per token's going down, the cost per agent's going down. If you don't have data or distribution, I think you got to get in and get out quickly.
Yeah, I think an operational platform is a little different than just an LLM. And I think that if you can make something that is very, very sticky into the workflow, especially if it's in a space that's been previously starved for technology, then it's not so much about AI, and it's more about leveraging AI to beat up on underperformant technology platforms that have taken advantage of healthcare clients because the clients had no alternatives. Because there's still a lot of parts of the healthcare industry that are like that, just really bad tech vendors.
Yeah.
You know what I mean? Like taking more money than they should for underperforming.
I think that's right. I don't know how you can hold margins, though. So say you automate a small hospital and it's much more effective. I think lots of other companies will be able to see those workflows and
I think the switching costs for these organizations are pretty high, right? Like people don't want to learn more than one system.
Yeah.
So I don't know. I get your point. But I think it's a one-time opportunity for the first mover with the best tech into an underperforming tech ecosystem. Yes. Like you just go in, you take it, and then you keep it. The churn will be relatively pretty low, because it's hard to beat you if you're decent.
Yeah.
Hyro raises $45 million growth round to expand AI agents, to your point. But this is different. So first of all, this is backed by One Medical's Amir Dan Rubin, who was the C-level at One Medical and now runs a venture fund called Healthcare Capital. This is a really, really, really sharp guy.
Yeah.
And super connected guy, and very, very knowledgeable. So $45 million.
Norwest and Define. They're all
Norwest, Define. They've got Bon Secours as a client. So it's this one actually feels. But again, this is one that's going after that higher tier. To me, I don't think they're in it for the midsize,
right?
Independent clinics, right? To me, that they're going after big health systems. If I had to guess, if I had to guess. So anyway, congrats to them. I like Amir, so best of luck to them. Arya Health lands $18.2 million to expand post-acute platform. I feel like we've covered them before and previous rounds that they've had. What round is this? This is Series A, bringing their total raise to $25 million. So maybe we covered the seed round.
Yeah, but I don't recall, but maybe.
This one feels familiar. Acme led the round with participation from Ridge Ventures, 12 Below, and they had to note OpenAI executives. They had to note that.
Yeah, so I really like the post-acute space because it is a lot of spend, and it's
fragmented.
There's no real dominant player.
Yeah.
Scion, part of LifePoint here in town, has a significant platform, but they're still a small percentage.
Still a small percentage. It's like talking about Brookdale and senior living.
Right.
Like big, but 10%.
Right. And then there's no real dominant tech platform.
No.
Which is a hassle because you got to got to integrate with all the different things, but it's an opportunity. Yeah, it's an opportunity.
Yeah, you got a shot to win.
Right.
You got a shot to win. They're not sophisticated buyers.
Right.
You know, and they do get approached with a lot of tech. So, you know, actually closing deals has been a consistent challenge in that space. But I agree. Post-acute is at least a space where you can win. You can't win in a space where Epic is dominant.
Yes.
If they're a small player, you can win. If they're a dominant player, it's hard. You can't win. Right. Trump considers Fed chair selection by year end from slate of 5 finalists. So this is our first policy story, and I think the point here is not for our listeners to really pay attention to these 5 finalists, but more to realize the clock is ticking, and Trump probably doesn't need to talk about getting rid of Powell because we're going to blink and in 6 months he's going to be out of there. And I think he's been defanged and probably is not looking that strong anyway. So he should just focus on the future at this point.
Yeah, that's right. I think there's no question that Trump is the president when the next chair is nominated, which will be in the spring. And he's going to pick someone who's very accommodative to business. I mean, Trump has talked about that forever before he was even in politics. Mm-hmm. He did pull in Scott Bessent to interview 11 people that he chose, and Bessent narrowed it to these 5. So I don't know. I'm hopeful that we get someone who at least is intellectually strong as well as accommodative. But there's no question they're going to nominate someone who, for the first few meetings, maybe the first year or so, is going to reduce rates.
Listen, you're not making it this far.
Yeah, that's right. That's right. You didn't get in the 11.
That's right. That's right. Yeah. So you know, there's two current Fed governors in here. BlackRock executive is in this group. So you know, there's one thing we know about President Trump is alignment and loyalty are. Yeah. You don't get a position like this without significant alignment and loyalty. Those are just things we should expect. Every last one of these finalists has already committed to. Right. Trump and Xi ease off the trade war, but new nuclear threat brings a chill. The two leaders reached an agreement on fentanyl, some tariffs, and rare earths, at least for a year. But even as the global trade picture cleared a little, Mr. Trump spurred new worries about nuclear proliferation. This was an interesting public display, the two of them, you know, and I think one of the things I walked away with from this was not that dissimilar from the meeting in Alaska that Trump had with Vladimir Putin. Mm-hmm. Which is, you know, when he meets with these leaders, they are not deferring to him. Mm-hmm. You know, they're not deferring to him. And, you know, Trump even said, you know, he's a tough negotiator. That's not good. You know what I mean? So, you know, he I don't want to say that he shows his cards, but he speaks his mind, you know, quite fluidly. And, you know, President Xi just looked very much like, okay, you know, what kind of deal are we going to do right now? Right. I have a friend who just got back from China, is in the electronic space, you know, dealing with robots and things of that nature. He was like, it's unbelievable out there. You know what I mean? Like we have. If you're in America, you really do not.
We need to go.
You really do not understand how far ahead they are, and you know, we've heard Balaji Srinivasan say this over and over and over again. You know, he says, listen, if you're an American and you have not gone to Riyadh, Dubai, Singapore, you know, Shenzhen, Beijing, like there's a list of, I don't know, it's like 7 places. And if you haven't been to even one of those, your understanding of the world is like very, very off. I think one of the most interesting things Balaji always says is like, actually, you should then go to a tier 2 China city so you can see that like the tier 2 China cities are better than every tier 1 American city. Right. And I haven't been to all of those, but I did spend a week in Riyadh. I told you, I came back and I was like, this is not what we think it is. Right. It's not what we think it is. You know, 250,000 people were at their technology conference, Leap, there, and no one in America even knows this conference exists. Right. So we're really not aware of the strength that's being developed in the East.
I think that's right. I mean, what I would say about this summit, and it rhymes with what you're saying. I think that America and China both flex their muscles against each other. Yes. We, you know, postured about tariffs, and, you know, we're a significant market for them. So that is something we can threaten. And then China countered back, I think, very effectively with soybean. We're not buying any soybeans, and we're not sending any rare earths. And that experiment of kind of sparring with each other, I think, is what we have witnessed over the last 6 months. And my belief is that
what's your scoreboard right now?
I think we are losing.
Right. Yeah.
We lost on all fronts.
Yeah. We've not.
Were not convenient for them, but their
glancing blows.
Their threats were much worse.
Glancing blows.
Yeah, that's right. And we don't have an answer. We need to try to figure out.
We're not going to have an answer.
Right. We're not going to have an answer in a time frame that makes sense.
No.
And so, at least from my point of view, Trump needs to get whatever he can get and try to not pick a fight with China. We are a peer to them. We might be negative to them. I don't know. I think that the robotics progress, their Achilles heel has always been the population problems. And robotics is going to make that.
Solves a lot of those problems.
Yeah, yes.
AI and robotics solves a lot of those problems.
That's right.
And they have integrated those technologies into their society. It's not like us where we're like, is this going to work?
Right.
They're already there.
Yeah. Right.
They're living in the future. All right. Trump hopes to bully SCOTUS into upholding his tariffs. Will it work?
Yeah. So I just want to give our listeners a heads up about this. Next week, the Supreme Court is going to rule on the IEEPA tariffs, which is the law that Trump chose to give him the credibility to be able to put a tariff in.
Yeah. Is this an emergency?
Yes. And the people that I've been reading think it's less than 50% likely that the Supreme Court, even though it is very conservative and would naturally side with Republican presidents.
Yeah. But this is a real key fundamental question here.
Yes. Will they follow the letter of the law, which it seems like through the legal scholarship, I don't know myself, but the legal people I'm reading, listening to, seem to say it's not a good case. The Trump administration doesn't have many good arguments, and it seems more than 50% likely that it would get struck down.
I think what's really going to be litigated here is unified executive theory or unitary executive theory. Right. That's what I think. That's what I think this is really about. I don't think it's about that particular thing. It's about whether or not the president can do what the president wants to do or the president feels is necessary. I think so many legal scholars conveniently avoid that one because it's not something people want to bring up because it makes you seem kooky and crazy. The same way talking about AI taking jobs felt crazy until now it's taken away all the jobs, right? We're not willing to have conversations about what's actually happening in reality, right?
Yeah, I think that's right. So is it Justice Roberts? I don't know, he may have a different title because he's the head. Chief Justice Roberts.
Chief Justice, yeah.
I think he has the chance to strengthen the independence of the court and make a point that there's three bodies of government in the U.S., and he has a chance to cave and just let the president do whatever he wants. Now, there's going to be a lot more detailed arguments than that, but I wanted to bring it up because next week, if it gets overturned, I think that would be good for America, and it would be really, Wall Street would be surprised, a lot of people would be surprised, and we have to return the money. So, all of that money that we've collected, now we have to figure out who put it in and send it back.
Big week next week. All right. The FDA is aiming to lower drug costs and moves to speed the approval of biosimilars. The agency will no longer require studies comparing copycat biologics to their branded counterparts, which could help developers bring them to market more quickly and cheaply. Of course, lower regulatory barrier will definitely make things faster and cheaper. This seems like it was something we would hope. And of course, my bias is, I think, generally speaking, Marty McCary is pretty smart and I think relatively centrist amongst the people who have found their way into positions this high, and also, science-based in many of the things that he points to. So my hope here is that this is a, science-based decision to sort of say these these regulatory hoops are unnecessary, and we need to prioritize getting access to lower cost drugs to the American public, especially in a time where, there's so many other challenges that the American public faces from a cost perspective.
Yeah, I think that's right. And if you get rid of the full analysis with clinical trials and everything, which they say in the article costs, something like $100 million to run through, I think that's great. And if it's biosimilar and does this, same effect on the body, we probably don't need that full thing. But there should be some process so that we know what, where is the line of biosimilar versus different? I mean, are all the GLP-1s biosimilar? I don't know. They have slightly different mechanisms of action. But I agree that McCary is reasonably centrist, and I think he is interested in safety, but also being efficient. So, yeah, it's more just like faith that he'll do the right thing, but cutting bureaucracy is good.
Yeah, I mean, I'm with cutting bureaucracy, and also I have a bias to kind of believe he's a good faith actor. Yeah. So that's kind of, those are my cards on the table on that one. Into payers, United Health revenue rises as turnaround efforts continue. The healthcare giant said third quarter revenue rose to $113.2 billion from $100.8 billion.
Yeah, so it's hard times in payer world. That they had increase in revenue, but MLR is 89.9%, and they're just struggling. I mean, their stock was down. It's down continuously. It's always down.
Yeah. Okay. CVS posts loss on write-down, boosts guidance. Third quarter revenue grew to $102.87 billion from $95.43 billion a year earlier.
Yeah. So same story, right? The revenue's growing a little bit, but their
MLRs.
They're not as profitable. They're struggling.
Yeah.
All the payers are. I mean, we have a series of them here.
Yeah. There's a really bad one coming up. Yeah. But this one, Cigna's 2026 pharmacy profits could be dampened by transition to rebate-free model. Overall, Cigna expects earnings to grow next year, but investments in a new PBM model and discounted contracts for some large clients could lower Express Scripts profitability. So Cigna gets to play a little bit more offense because they did the hard work of selling off their HealthSpring business. And so they're out of the government business. Good for them, because they're not dealing with all these crazy repercussions. Probably as companies are lowering their headcount. It's interesting, right? I mean, I'm sure that they churn more money with the more heads that are there. But there's also probably some cleaning up of the risk pool that probably also happens there and offsetting in actuary. So I'm sure that they are, the top line's probably down, but maybe the risk pool gets a little bit better. I mean, look, I think Cigna overall is amongst the payers, relatively well positioned.
No question.
Relatively well positioned.
Yes, they're the best payer. I'm not sure I want to own any of these payers, but they're the best one. I don't know how much risk they have with the employers. I think it's mostly an ASO like business.
Administrative business.
But it was real. I mean, it is a sign of strength that they're getting in front of the change. There's going to be laws, certainly policy, and then laws that prevent the old PBM spray price. So them coming out in front of that and announcing they're not going to have that anymore is a sign of strength, I think.
Yep. Yeah. So they seem to be cleaning up their act so that they can navigate the storm. Centene posts a $6.6 billion loss on a massive value write-down. This was a goodwill impairment, so kind of accounting kung fu here.
Yeah.
I don't know how you shake off the size of that goodwill impairment. I mean, $6.6 billion.
Centene is I think they're probably 100% government.
Yeah, them and Molina, right?
And they're both really rough. Molina was last week. It's just all their stats are going in the wrong direction.
Yep.
So it's going to be bad.
Headwinds everywhere for them. All right. Now, moving to the providers, a better story, generally speaking. HCA raises 2025 guidance, but eyes looming headwinds. The for-profit operators' guidance raises cautious, one analyst said. HCA is still staring down challenges like the potential expiration of more generous ACA subsidies.
Yeah, so the health systems, at least the for-profit ones that are reporting this week, they'll report this week, they're pretty focused on operations, and they've done a good job. And they're navigating their way through a very difficult environment. HCA knows how to operate. I mean, they're good at that. I don't know. I think it's still like a shrinking iceberg over time where it's harder and harder to eke out earnings growth. But compared to the payers, they're much better.
Yeah, for sure. Tenet pledges more money for high acuity growth in 2025. The hospital operator will invest more in organic hospital growth and high acuity service lines as it sees strong demand for services.
Yeah, Tenet has a bigger percentage of revenue from outpatient.
Yeah,
so they
were out in front of the whole ASC game.
They're better positioned for the changes in that reimbursement space, and a good operator too.
Yeah, I mean HCA and Tenet just basically two peas in a pod.
Yeah,
I mean, in terms of stories that they roll out every year. UHS raises revenue guidance for 2025. The guidance raise followed rising volumes in its acute business and a newly approved Medicaid state supplemental payment program. They posted third quarter revenues increasing 13.4% year over year to $4.5 billion.
Yeah, pretty well run. I wouldn't put them in the same category as HCA and Tenet, but good operators. They have more behavior. They have a behavioral piece
big behavioral
too.
Big behavioral book. And then CHS is going to sell more hospitals. So that story continues. Interim CEO and President Kevin Hammond. So it's already done. Tim Hentigren has already moved on. He said enough is enough.
CHS. It's a hard set of assets that they're managing.
They've been divesting for it feels like ever
since Wayne retired.
How long ago was that?
I mean, there's
6 years ago?
Yeah, it was pre-COVID.
I mean,
they bought maybe not the best assets with a ton of debt.
I don't think there's any question about that now.
Right.
We don't need to
Yeah, I mean, there's no reason to pick on them, kick them when they're down. But
it's been 6 years of that. So moving into pharma, Novartis agrees to acquire Avidity Biosciences for $12 billion. Swiss pharmaceutical company says the purchase would complement its existing pipeline of treatments for neuromuscular disorders.
Yeah, I mean, it was a huge deal, $12 billion. Novartis is good operating.
This is the move that they needed to make because they've been I think they've been flailing a little bit, when compared to Lilly, GSK, some of these other brands. It's just it wasn't really clear where are they going to make their mark. So neuromuscular, this is a pretty big, it's a pretty big move. Obviously, $12 billion is not a small price to pay, but also it's differentiated. We've been hearing so much about cancer and weight loss, cancer and weight loss. So neuromuscular, okay, that's.
Yeah, I think Novartis, they went really strong into digital therapeutics.
Yes, as we know, we sold the company to them.
But and I thought that was brilliant at the time, but it wasn't brilliant.
The market just wasn't
really ready. They were too early. So.
Yeah, the market wasn't ready for that.
Yeah.
So Novartis expects to ride out patient losses with sales, profit growth ahead. The company stepped up deal making in a bid to offset patient expirations for key drugs. So this is what I mean. I mean, that last move really signals they're getting in gear because I feel like they've been, I don't know.
Yeah, and they have expirations of I mean, they said it in the headline. Yeah, they're losing patent
key
protection.
Drugs. Yeah. So the study finds evidence that text-based therapy eases depression. This is the Health and Us story for this week?
Yeah.
Okay.
It could be in either one. It could be in pharma too.
Pharma too. Okay. Yeah. Well, I consider this to be digital therapeutics. Yeah. So a large-scale randomized trial of texting therapy concluded that its outcomes were as good as video sessions in treating depression. That's a big deal.
Yeah.
That's a really big deal.
I'm not surprised that it is effective, but I am surprised that it's as good as video, because that visual kind of facial expressions and things I would have thought would be important, but it's a very large randomized trial, so obviously that's not correct.
So what's really interesting, right, is that we have evolved. I think it's fair to say just the pace of change has been so quick, but we've evolved over the last 15 years to really communicate a great deal over text.
Yeah.
And I mean, with the use of emojis and other things, we actually can get a fair amount of context in through text, right? I mean, I feel like I can have group conversations or even one-on-one text conversations and really feel like I've had a real conversation with someone. Video is nice, but interestingly enough, it doesn't leave an artifact for me to go back to and reflect on. Whereas text does give you that artifact to go back and reflect on. And so in some ways, it's a superior method. And also, Gen Z prefers texting.
Right.
to phone calls.
Yeah.
So there's probably that too. It's like this is becoming a preferred modality of communication for many.
Well, I mean, I think we could have had this debate yesterday. Now I think it's been settled. It is.
Yeah, that's right.
It is as good. And I think that's a really important thing for our listeners and really clinicians and everyone to know that it's no longer true that you have to be in person or even on video. There's a lot of great benefit. And given the scarcity of behavioral health talent, we need to do everything we can to sort of get it out there as much as we can.
Yep. Are we into crypto? Yes, we are. JPMorgan to let institutional clients pledge BTC and ETH as loan collateral by year end. All right. So I'm just gonna say this one time. I'm literally, like, mark my words, I'm not saying this again on the show. We're just gonna cover crypto.
Okay, I don't know what you're gonna say. So, yeah.
If you are a normie, TradFi, doubter of crypto, I don't know what else you need to hear.
Yes.
Beyond JPMorgan is going to let institutional clients pledge Bitcoin and ETH as loan collateral by year end. I don't know what else you need to hear.
That used to be, well, I guess they haven't finished it yet. By year end, it's 2 months away.
Yeah, we're at year end.
That used to be the only impediment to really going full on in, like, all your assets in crypto, because you couldn't buy a house, you couldn't buy a car, you couldn't buy things with leverage. And that is now almost over. That's the last piece to fall.
Well, it's almost over. They're letting their institutional clients. They're not letting the individuals, because that would be too far. But I guess what I'm saying is they're letting institutions do it, which means it's real. It's y'all, it's real money. It's real store of value now. It's not this speculative, volatile thing. It's real now. JPMorgan is going to let some big corporation get a bond leveraging Bitcoin on their balance sheet. And not just Bitcoin, ETH.
Yeah.
That's it. I'm not saying it again.
Well, I have a question for you.
Okay.
The Bitcoin and ETH treasury businesses, and then other companies that decide that, well, we're not a Bitcoin treasury company, but we should have some Bitcoin on our balance sheet.
Yeah.
Because we have lots of stuff on our balance sheet.
Yes.
Is this new decision by JPMorgan going to increase that or decrease that? It's going to increase it by an incredible amount.
It's going to increase it.
Because
it's going to increase it.
A CFO who is not like a crypto native, really person wanting to do it, this is the last piece that they needed. Like, well, we buy whatever. We buy IBM, we buy Google, we buy...
my stocks are collateral.
Yes,
my stocks can be collateral.
Yeah, right. And so this needs to be collateral too. And now it is. So that's going to accelerate.
Yeah. So I'm not saying it again. All right. Western Union, early telegraph pioneer, joins the crypto arms race. The company plans to launch its own stablecoin in 2026.
So I think actually Western Union is going to get killed in this market. But it's interesting that, they were the stagecoach, like, telegraph company, and now they're moving into crypto.
You don't spend enough time outside the country, Vic.
So you think that their offices around the globe are...
I just wouldn't say killed.
Yeah. Okay.
I would say the Western Union brand is much stronger than Americans think.
Yeah.
Because we don't need traveler's checks and money orders anymore. Like, that's, we all have Venmo. Nobody needs a money order. And nobody needs a traveler's check anymore.
Yeah.
But, like, dude, you go into other countries? It's not true. It's still pretty difficult to move money around. It's still pretty difficult. And I think their brand and their footprint is still relatively sticky.
Yeah.
Still relatively sticky. So to me, this is a major global thing. One of the big problems with crypto is that in America, we have the dollar.
Yeah. So we don't have the use cases are very little.
The use cases are so limited because we live in the world, in the country that has the world's reserve currency. But you go into like the other 200 countries around the world, and it's just a radically different story. It's really, really different. And like, in order to trade in and out dollars, you got to pay somebody.
Yeah.
You know, it's hard. It's hard. So anyway, I think this is a necessary move by Western Union.
And they have to do it.
Yes. And
they're dead if they don't do it. So.
And why are they dead? Because
crypto's
real.
Kill them.
Because crypto's real.
Right.
Because crypto's real. All right. Mastercard to acquire crypto infrastructure startup Zero Hash in deal worth up to $2 billion. Again, Visa and Mastercard. They have to do this. They have to do this. You think they want to do this?
No, they'll make less money on each transaction.
Yes, they will make less money. They do not want to do this.
But they have to have the alternative.
Yes.
Because a lot of people are going to demand it.
Because this is where we're going.
Yes.
Because they are going to have to decommission their old rails at some point in the reasonably near future. I can't put my finger on it, but like, it's coming. It's coming.
Yeah.
Eli Lilly partners with Nvidia to build AI supercomputer for drug discovery. This is our first story in the AI rundown. The drug maker hopes Nvidia chip-powered supercomputer will help it find new drugs and accelerate lengthy R&D times.
Yeah, so there's several signs this week that AI is really sort of filtering into healthcare in a way that is noticeable to me, more so than before. So Nvidia has partnered with all kinds of tech companies, but Lilly's the first healthcare company I think that they've partnered with, and they're establishing a supercomputer to create new drugs with Lilly. It's incredibly positive, really, really good. And I think Lilly continues to be a shining star of American healthcare technology. And it's coming quickly. So there'll be several of these stories. There'll be 2 or 3 points where I say, like, this is a sign. OpenAI has one. There's one other one I can't remember.
Huge. OpenAI completes for-profit transition. It's done. Pushing Microsoft above a $4 trillion valuation. The startup's conversion clears the obstacle for potential initial public offering and gives Microsoft's 27% stake in a new public benefit corporation.
And so,
what a deal Satya Nadella did.
Yeah.
What a deal.
Incredible. He's a great deal.
What a deal he did.
Yeah.
27% stake.
Yeah.
Vic. Like, whew.
So the structure.
Do you remember when Microsoft was supposed to die? Because like Apple was just going to kill them. Do you remember that?
Yeah.
Like the deal making that they've done.
When he took over, they were an also ran. I mean, they're a big company, but no one cared about them.
They were on their way to IBM.
Steve Ballmer had been sort of like just hanging around, not doing much.
They were on their way to IBM.
Yes, that's right. Yeah. And they bought Xbox and GitHub. Those are the first 2 things. I was like, holy shit.
LinkedIn.
And LinkedIn. Oh yeah, LinkedIn. I forgot about LinkedIn. Yeah.
And then they also like just stopped trying to push their crappy old programming languages, and they just like adopted everything open source.
Right.
They just became an open source house, right? So that was brilliant.
Yeah.
They built out Azure.
Right.
And made it very competitive. They gave away Visual Studio. Remember when they used to charge for Visual Studio?
Yeah.
Remember that? Then they gave away Visual Studio for free. I mean, like the high quality moves here are just like.
Yeah. Great. So let's talk about OpenAI just for a second. There's a nonprofit that I think actually controls the for-profit or owns enough of the for-profit. And do you know what it is going to focus on in its nonprofit mission? Healthcare. It's in the story. They're going to focus on health and advanced biology, maybe. They have hundreds of billions of dollars because they get money from OpenAI. So that's the second story this week that I just felt like Nvidia is partnering with Lilly. OpenAI could have picked anything. I've heard that it's not quite 50%, but it's in the 40s of people's prompts are about healthcare. And in their demos, they have lots of healthcare stuff. I mean, they're coming to healthcare. They're already healthcare.
OpenAI's less flashy rival might have a better business model. Anthropic, backed by Amazon and Google, is focusing on corporate customers rather than the mass market.
Yeah, and so I think this is good. Anthropic being a solid competitor to OpenAI we need. They are a better corporate citizen, and I don't think it's great to have Google only. And so I really want Anthropic to do well. I use Claude all the time. I forget what it was, but if you look at their revenues, they have close revenue numbers to OpenAI, but they don't have the free users. Mm-hmm. They don't have that sort of like free consumer in their house just playing around with it.
Yeah, people are not. Yeah, business people use Claude.
Yeah, right. So they're not. They might lose out on the data over time. They don't necessarily know what everyone's searching worldwide.
But they'll be great for the business world.
Yeah, that's right.
Yeah, they'll be great for the business world. Peter Thiel-Backed startup secures $100 million to make chips in the United States. Substrate seeks to build semiconductor factories with new laser-based technology, but the hurdles are high.
Yeah, so they are going after, I can't think of the name, go down in a minute. There's a European-based monopoly that they do all the lithography stuff. It's like an acronym, but they make these machines that do lithography. Hopefully I'm saying that right. Making chips. ASML, that Dutch company. And they're the only source on the planet that can make these machines that semiconductor fabs need. It costs like $200 million for one. And there's a shortage. I mean, they can only make so many. And so Peter Thiel is trying to compete with them. And God bless them. I hope it does well.
Well, look, I mean, here's the thing. With the whole narrative around an American dynamism, if you have the science firepower, meaning like intelligence, the people, you can raise hundreds of millions of dollars because America is so behind on this, as we said earlier.
We have to control our own destiny.
Yeah. Did you see who's in this deal? Like besides the Founders Fund and General Catalyst, InQtel is in this, right? You know what I mean? Like that's the. You know, it's like
it's the CIA's
it's the CIA's nonprofit.
It's a national security issue.
Yeah. All right. Nvidia becomes the first $5 trillion company. Shares have been boosted by the AI boom and a flurry of new deals. $5 trillion.
So it took them 6,000 days to get to 1 trillion.
Yes.
And then
from that point, 180 days to get to 2.
Yep.
From that point, 66 days to get to 3. From that point, a whopping 273 days to get to 4. And from that point, 78 days to get to 5.
Yeah. Depressingly, I remember when they hit 2 trillion. I did not buy the stock.
Why do you think people are saying this is an AI bubble? I mean, I understand the whole thing about I get the whole thing about like revenues and these other things, but like, have these people used these tools? Like, do they not understand? Like we're all going to replace some meaningful percentage of the time we spend with lawyers, some meaningful percentage of the time we spend with designers, some meaningful percentage of the time we spend with copy editors, some meaningful percentage of the time we spend with analysts. Some like if you're using the tools, this cannot be more obvious. Like it just cannot be more obvious. So I don't. Well, to me, the whole bubble thing, I'm like, I see a lot of people that still have jobs that are not going to have jobs in 2 years. I see companies that have not like eroded sufficiently yet.
Yeah, that's right. I mean, I guess I'll take the counter side just to have it be more interesting. I mean, I think that technology adoption goes in a very well-studied path, and we have seen it in markets where, like in the .com bubble, the internet had all the promise that we all believed in 1997 and 98, but it wasn't quite ready yet. The markets weren't mature enough yet. And so it took maybe 10 more years to sort of build it out. And that is sort of the natural emotional aspect of the stock market. Everyone is selling about their growth and upside and one-upping each other. And every market in the history of markets has gotten overextended and then corrected. This one may not have gotten overextended yet, but markets in general get overheated.
Yeah, I think AI and crypto are fundamentally different. I think this is I just think it's fundamentally different. And I think there are likely to be analogs. I think people talk about incremental technologies a lot. This is I've been saying this from the very first time I played with ChatGPT. I was like, it's just different. It's just different. It just is different. And
I think
here's the thing. We're not like gonna go back on this. Like whatever we're building out in front of, but okay, here's a big thing. In a lot of these other, so we think about pets.com or even Amazon or things like that, those things needed to change consumer behavior, right? They needed to shift where dollars were flowing to. Mm-hmm. This is cutting dollars out. It's removing dollars because it's dropping the cost of knowledge to zero. It's dropping the cost of intelligence to zero. So it's a compressing technology. It's not a switching technology that like makes things more efficient and convenient. It just collapses what previously was very, very high dollar value to nothing. It takes something that was $250 an hour, $1,000 an hour, right? And it takes it to nothing. It's just a different thing.
Well, yes. And I don't own Nvidia personally. And I should have bought it at $2 trillion because it's at 5.
Yeah, but now you're looking at this and you're like, this is too expensive.
Well, what I am concerned with is that I agree with you on inference. So I think inference is undervalued. But Nvidia's technology is really used for training. And I think that the existing models today are more capable than we can utilize. And so how many more iterations do we need? Yeah. I don't know. Like it already is, there's already more capacity in Gemini and Claude.
I mean, you're still talking
Goose.
about us using.
Us as an economy using.
Well, you're talking about humans using.
Yeah. Humans.
If the humans can't use the damn models, the models will use the models. Software will use the models. Like, you see what I'm saying? That's how this is going to go. If you don't get really good with these things, if you don't become a black belt with these things really fast, you're going to be replaced by a bot. Mm-hmm. That's going to matter is compute in a second.
I agree with that. And I don't know if that benefits NVIDIA. Now, they're getting... No.
There is going to be a long run of data center build-outs.
Yeah. And Jensen is smart. The reason he's getting enmeshed in all these other companies is that...
He's doing the Microsoft play.
Yes. He knows that inference is going to be 98% of the compute spend, the token spend, and he's going to be in all those markets because he's seeding that now. But I don't know if there'll be a bubble or not.
Google revenue soars to record as AI boom lifts cloud business. The tech giant says AI spending is set to reach up to $93 billion this year.
So Google I own personally, and I would buy more today if I had any money. I think they have across the board assets because they have Gemini, but they also have data centers and they have DeepMind and all these other things. But I mean, both can be right. I mean, Nvidia has certainly grown faster.
Microsoft to double data center footprint in 2 years. Company reports strong growth in its Azure cloud computing business, which hosts AI models. I mean, I just
the cloud is going to grow massively, and the human labor force is going to decrease. What's likely to happen?
Yes, that is what is going to happen. Nvidia to invest $1 billion in Nokia in AI pack. The chip maker will have a 2.9% ownership stake in the Finnish telecom companies. This is the other thing, right? They're just taking this accumulation of value and they're just diversifying with it. And they're hedging against what you're talking about.
Right, exactly. That's, I mean, Jensen and the rest of the team are smart. They know this too, and they're spreading out and diversifying, and that's smart.
Yes. The AI startup fueling ChatGPT's expertise is now valued at $10 billion. Founded in 2023 by 3 college dropouts, Mercor recruits humans to train chatbots, a new industry goldmine.
Yeah, so this is the fastest growing company in the history of the world, including OpenAI. And they have been profitable from the time when these two and one other guy were in college running out of their dorm room. They never raised money to feed burn. And they help all of the frontier models make improvements, basically. So that they get experts, someone who's really good at, they're really good at hedge funds. And then they hire them on an hourly basis to review a trading strategy for OpenAI and Anthropic and all those, and you get paid by the hour to sit at your own home computer and look at the output from a model and say where it is right and where it needs to be better. And they're hiring people in accounting and in finance and in sales and every demographic, every expertise, and paying a lot of money per hour to teach the models to be better than every other human.
Yep. And then
at some point the music stops and there's no one, they don't need it anymore.
At some point the music stops. 1X Neo is a $20,000 home robot that will learn chores via teleoperation. The humanoid robot will start shipping next year. So this is the thing, right? We're going to cut SNAP benefits. We're going to continue to extend the K-shaped economy in the 2 directions that it's going in, right? Like, we're doing that, okay? But, like, you're not even going to be able to clean homes anymore.
No. You're going to build a wall around your house and have robots inside that take care of you. And then all the people outside will have no jobs, no food, no anything. It's not going to end well.
This is not heading in the right direction.
Yes.
This is not heading in the right direction. All right, final story. Elon Musk challenges Wikipedia with his own AI encyclopedia. The billionaire launches AI-powered version Grokpedia on Monday. I checked it out. I went and searched up Nashville SC to kind of see what they put in there. I didn't show up in the story. I'm in the one on Wikipedia. So that was like one of the things I wanted to just I wanted to just see. Yeah. And it very much focuses on like the MLS version of the club, which is kind of what I would have expected. The real story here is that we're not going to have a single platform for anything anymore. You know, based on political ideation and other things and affiliation, you know, you're going to go to the platform of your choice, you know, that identifies with you. And so there is no town square. There is no encyclopedia of the internet. That there will be, and this is the thing that AI enables, right? I mean, like the idea that anyone could have competed with Wikipedia before seemed impossible because the whole world had aligned on it. And like he just launched, boom, it's up, it's running. You see what I'm saying? Like that's the.
That is the problem, that anyone can, not anyone, if you're willing to spend, I don't know, $5 million, you can begin to create your own personal history of the world. Like this is how things happened, and carve out aspects that you don't want people to follow, unless you know ahead of time, there's no way for a visitor to Wikipedia or Grokpedia to understand the differences. You have to know, like, from other sources, from a friend or from your understanding of Elon's political points of view. And so the whole idea of what is true is in doubt. And I feel bad saying that, but I think that's where we are.
That is where we are. That's where we are. Sometimes I wonder at the end of these shows, because I'm like,
we got to end on a positive note.
No. We're chronicling what's actually happening, right? I mean, what are we going to go do? Find a bunch of like ridiculous, like fake good stories or something like that? Like, this is what is happening in this country. We're chronicling it.
Right.
To me, I kind of walk away and I have to like sleep. I always have to sleep these shows off.
Yeah.
But then, I go back to the work of working with founders to try to make healthcare better for everyday Americans.
Yeah.
And like that's the upside. I mean, I think we're fortunate to work sort of at the intersection of the inevitability of this wave of innovation, but in something very, very meaningful and human. Yeah. And I'm grateful for that. I'm grateful I get to, try to steer this, some little blip of this energy towards actually making families' lives better.
Yeah.
And I think as much as we can do, not just Jumpstart, but as much as every last one of us can do to try to find ways to do that, that's a great thing. But we are facing a wave. This is a huge wave. And I say that, as this show, hopefully will be put out on Saturday, on the eve of, an incredibly uncertain time. I mean, it's one thing to sort of say things in DC are kind of crazy or blah, blah, blah. But like, you want to see destabilization. Let's see if this really goes through and people really cannot
people can't get food.
That's a really destabilizing thing, Vic.
Right.
That's a really
and
destabilizing thing.
And
I don't know how either party wins, in the face of that. Right. It's just like,
I agree with both things. The macro overarching stories are hard. Kind of what keeps me coming into Jumpstart is in healthcare, we need our people. Like, not a lot of healthcare middle management or nurses or doctors that if they want to work, they can work as much as they want. We have a lot of people that need healthcare.
Yeah. I mean, I'm leaving here to go to a healthcare facility that AI cannot manage.
Yeah. And yes, there's this one robot, but it's going to be a long time before we make enough robots to replace all the nurses and doctors and med tech and everything. It's hard and expensive. And I think empathetic care where you're like holding someone's hand and talking to them about what they're going to go through is, at least for now, humans are better at. But we need to bring tools to make the humans in healthcare more fulfilled, more able to help people, get paid more, everything. And I think that is a place where we can do some good, even though the rest of the world there's a big tidal wave crashing soon.
Yeah. All right. Next week, we're not in studio, but we are on.
Yes.
So I look forward to it. Thanks, buddy.